My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Yesterday, everyone was tearing their hair out, screaming about an inevitable recession. Today, we realized we aren't getting much evidence of recession, at least from the corporate world. So the Dow gained 294 points, S&P climbed 1.04%, and the Nasdaq jumped 1.03%, respectable. I think we're in a recessionless recession because I follow the actual micro data from individual companies that report. The people who only follow the Federal Reserve never want to get their hands dirty and do their homework. They just spend all their time trying to second-guess Jay Powell. They remind me of disgruntled Eagles fans who think they know more than the coach or the general manager. Let me show you what I mean. When you run down the companies that reported in the last 24 hours, it's very hard to make the case that we're headed for a serious recession from here. I want to go right through. All right, let's start with Palantir. Last night, CEO Alex Karp told a story of huge contracts won, massive $10 billion contracts that produced 27% revenue growth when Wall Street was only looking for 22%. He's doing it with a tremendous breadth of AI and says there's unprecedented demand for these solutions. Even though Karp can be a little too colorful, it was a solid boost to those of us who believe in AI. Next, did you see Lumen today? Most people I know had written off this debt-laden telco company. Last night, though, Lumen announced that they're secured $5 billion in AI business with the possibility of another $7 billion in AI-related work with its fiber network. That is extraordinary, people. Stock rallied like it's getting multiple takeover bids. After the close tonight, the company delivered its full second quarter report, and despite a mixed result and a full-year guidance cut, the stock's climbing higher still. It went from a little over $3 to $8.80 in a single session. Don't you wish you had that one? I always like the rails as barometers of economic activity, which is why I like that CSX quarter so much this morning. This company, they reported last night, but this stuff just took off. This company has a vast panoply of cargoes, and they were almost all ahead of plan. Plus, CSX has this unique chemical franchise owing to its proximity to all the plants that make plastics from our country's incredibly abundant natural gas. CSX saw real volume gains and price increases, not just questions about how it's operating its trains. If you didn't know any better, you might think that there's a boom in the Southeast, not a recession. Two different cyclicals reported today, Caterpillar and Builders First Source, and both were sharply better than feared. Builders First Source, a housing supplier, bucked the weakness in remodeling and renovation, putting up robust numbers that should only improve as interest rates come down. All right, the company didn't blow away the numbers, but it had remarkable gross margins, suggesting the business is holding up much better than we thought. Plus, they're giving you $1 billion buyback. Buy! When the whole company's only worth $18.1 billion. Maybe you should join them. As for Caterpillar, I was stunned by how well they did in this environment after all these rate hikes. Record earnings per share up almost 8% year over year. Strong margins, expanding backlog. This is extraordinary at this point in the cycle. Remember, the economy is supposed to be in terrible shape at this point. But Caterpillar, it is doing great. So Builders First Source triumphs over a very hard environment in the repair and remodel business. We've covered this company, while Caterpillar is delivering record numbers in the economy that's supposed to be teetering. That's not what happens in a recession, people. But do you think any of those wolf criers have even heard of Builders First Source? Do they know the cat gave you a record quarter? Of course not. That's not what they do. Last night we had Stephen Yalof, the CEO of Tanger, on the show, and he told a very good story about the strength of factory outlet business. Sure. All right, factory outlets. So they work great in recession, so maybe that's a sign that there's a recession. Wait a second. How about Simon Property Group today? The largest owner of enclosed malls in America. They have to be cratering here, right? Wrong. Simon Property reported a true blowout. Much better than expected. They have almost no vacancies, having signed 1,400 leases with 30% new customers. They had a 5% increase in traffic in the malls. They gave you a 2.5% dividend boost. While CEO David Simon acknowledged the lower end of the consumer is strapped, he exuded confidence in the call. I know this, man. That confidence is real. The stock finished up 5%. What else? Now, okay, let's puzzle over this. If there's a recession looming, Uber's customers don't seem to show it. Gross bookings rose 21% year over year in constant currency. Mobility bookings growth accelerated to 27%. Deliveries up 17%. Audience expansion and trip frequency hit records. Do these numbers herald a recession to you? How could people still spend so much on cabs and food delivery if the economy is about to fall apart? If things were really weak, Uber simply could not put up these numbers. To those big-time bearish money managers who only think about what the Fed's going to do, maybe you should be thinking about what the consumer's going to do. Go read the Uber call. Find out why this stock rallied 10% in one session. Get your hands dirty. Is there anything more economically sensitive than a gym membership? Is there a gym company that's been harder hit than Planet Fitness? Then how did it report a 5-cent earnings beat off a 66-cent basis? Planet Fitness has a franchise model, so the key metric is franchise revenue, which was up 9.1% year over year. If we are going into recession, let me ask you, would Planet Fitness have authorized a $280 million accelerated share buyback? I don't think so. Hence why that stock rallied 6%. A lot of people were worried about commercial real estate, right? I mean, I know. There's so many subpar buildings in urban centers. So why the heck then did Barry Stern, like the super smart CEO of Starwood Properties, declare a 48-cent dividend, not just for this quarter, but for the one after it, right today? Strange behavior if you're worried about a commercial real estate recession, right? Well, maybe you shouldn't. Lots of people are concerned that the consumer's tapped out, right? Stop having a good time. We hear constantly how we need that consumer spending on discretionary items. Well, you know what? I'd say beer is one of those items. And this morning, the down the dumps Molson Coors symbol TAP puts up amazing numbers. Amazing. With stronger than usual shipments. They talked about continued growth through 2024. Hey, beer, I got ice in my cold beer. And that's what we used to say when we sold beer at the old Veterans Stadium in Philadelphia. People are buying beer again after a year-long hiatus. They got ice in their beer. You know what? And they're going out, too, even if they're doing it frugally. How else could Yum Brands, parent of Taco Bell, Pizza Hut, and KFC, put up such remarkable quarter this very morning? Their core operating profit grew by 10%. Yes, sales missed, but margins were terrific and earnings trounced the expectations, and that's what matters. Some might say it's natural for an animal health company like Zoetis to put up good numbers, as animal health is very important. But believe me, we know in a recession, people put off going to the vet with their pet. They don't go to the vet themselves. So Zoetis not only reported a great quarter, it also raised guidance. Clearly, people haven't started skimping on vet visits, so you get a 6% move higher. Look, I could go on and on, people. This is just a single 24-hour period. I know we have some weakness tonight in tech, but let's remember that almost every quarter we got today was a good one. The bottom line, there was just great quarter after great quarter after great quarter this morning. They just can't be seen by those who refuse to do the homework and only listen to central bankers, because it's too hard to do the stuff that I do. It does rankle me. But in the end, it doesn't matter, because we can see both the forest and the trees. Them, they wouldn't know the business end of a chainsaw. Let's go to Larry in Pennsylvania. Larry.
Hey, Jim. Booyah.
Booyah, Larry. What's up?
What's up? Hey. Got J.P. Morgan. I'm wondering if I should buy more of it or wait until it drops and buy more.
Well, don't we have? I think Leslie Picker's interviewing Jamie Dimon tomorrow, and I think the two of them are going to be terrific. It's going to be great, and I think the J.P. Morgan at 11 times earnings. I'm sorry, you are not going to get hurt that bad if you buy that stock at 11 times earnings. Let's go to Jeff in Sweet Home, Alabama. Jeff.
Hey, Jim. Big booyah and roll tide.
Roll Tide. Love it.
My question is about Nike. I'm in at 75.86 average. Bought all the way down, I guess, up until Friday. I should have bought more. My question is this: buy, sell, or hold?
All right, this is a very, very tough call, because I don't think Nike's doing well at all. But if they say, let's say they have a change in management, they do something very radically different, you're going to look back and say, how did I not buy that at 72? I would hold on to it, but I don't want you to buy it anymore. We're going to go to Dave in New York. Dave.
Hey, how are you, Jim? Good to talk to you.
Dave, I couldn't be better, man. I was out there. It was real hot today. I liked it. What's going on with you?
Well, a few things. We'd also like to see the market doing a little bit better. But I was wondering with Pfizer, what you're thinking on that stock. I think
Pfizer. No, I like Pfizer. I'll tell you why. They bought this company, Seagen, It's going to do fine. They've got a great dividend, and I think that they're going to slowly but surely turn the ship around. Pfizer with 5.73% yield, give it to me. All right, yes, the Dow sank over 1,000 points yesterday, and yes, it rebounded solidly today, but not enough. The important thing in all this is that the company's reporting solid quarters of earnings, and that's what's going to keep the market afloat, even as we look at the big data and we start blaming, Jay Powell and all the rest of the gang. That's what you should be focused on, is the earnings. Mad Money tonight, Meta was one of the only big tech players able to soar this quarter. So what was the secret sauce that made that social media company transcend its peers? I know the answer. Then in yesterday's market meltdown, the VIX had its second largest single day move. After today's relief rally, can investors assume maybe we're out of the woods with the VIX? I'm going off the charts to find out. It's going to be surprising to you. And international flavors and fragrances. Yes, IFF has a new CEO at the helm, and I'm hearing his vision for the company behind some of your favorite snack foods and, yes, perfumes. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.